Hey traders, Raghee here. Let's get a quick audio and video check in. I just changed a few settings on the mic. I think we're good to go. All right. So happy Wednesday, everybody. Good to see you all. Welcome to another episode of Charts and Coffee. All right. So what do we have going on today? Well, first of all, we have a little, what am I rocking here today? I'm doing some Kona Peaberry or Jamaican. I can't remember. Forgot what I ground up this morning, but 2 cups of coffee. I am ready to rock because we've got not only Charts and Coffee, but then we'll be rolling into, and you'll have to go back to either the YouTube channel for Simpler or my personal one. We'll be doing some live streaming day trading today. Just a special broadcast. I thought I'd be doing because of what's been going on in the markets. We're going to take a look at basically some really important points. One is a recent issue of Countdown Trader, which is this trend going to continue? And I think the bigger question is it a trend? And it's not the same answer across all the indices. It's not the same answer across all the sectors. So we've got to get a little bit more compartmentalized about where the trend actually is and where that relative performance is as well. So right after Charts and Coffee, we'll be kicking into that live stream. And then the other thing that we want to remember is this week is actually really devoid of major economic releases other than earnings. So the markets are sort of left to flounder. And when they don't have, say, data to twist the narrative on, you can kind of see what happens. Empty calendars are tricky. In other words, when I say empty, there's no Fed speaking. There's no major data release out there. So you'll notice that these quiet calendar weeks can be very, very tricky. On one hand, initially the perception might be, just up and away, or there's nothing in the way, no obstacles by way of hot zones, but that's not necessarily true. The weeks that we don't have data, is irksome as it may be, we have this constant flood of Fed speakers. It actually helps the market derive a narrative and find some clarity. So that chatter is helpful. All right, let's dive right into our questions. And Line Watcher, yeah, I saw that question before I posted it. I'm doing some Volcanica. Doing some, what did I grind this morning? I think I did some Jamaican for the first cup, and I think I'm doing some Kona Peaberry for the second. One of my favorite indicators to use to determine future price action. I don't believe in leading indicators. There's a big group of technicians who believe there's leading and lagging indicators. If anything needs price, my wave, grab candles, moving averages, if anything is calculated based on price, I think inherently you can't lead the thing you need, right? It even rhymes. You can't lead the thing you need. So when I talk about determining future price action, all I can do is determine what's happening now and find the path of least resistance. So, for example, looking at the SPY on our chart right here, if it's generally heading higher, and we have a double green market, I'm going to presume it's going to continue to head higher. I can do some things like look inside the SPY. What does that mean? I like to say I can crack open the index and I can look at, for example, the XLV and the XLE and say, well, are these sectors within the S&P ETF and futures, are they also moving higher? Do I have the sectors sort of confirming? To me, this is the ultimate market internal. You want to know what's going inside of a market? Quite literally, go inside the market. Find the sectors that are heavily weighted within it. Find the stocks that are heavily weighted within it. And that's pretty much where the markets are going to go. So that's the best answer that I have, which is don't worry about predicting where a market's going to go. Look for the path of least resistance. That's another way of saying work the probabilities. And I think you will find more often than not, you'll be on the right side of the market. All right, next up, Prabish asks, XLU and XLE have been, so utilities and real estate have been rallying in this market along with the XLP. We are seeing a little bit of a return to defensive. Yes, that is true. And NEE, which is the number one weighted stock within the utilities. I wouldn't call this an uptrend yet. I mean, clearly it's moving higher. That's actually a nice little 1, 2, 3 that did also trigger a wave reversal around 76.30. So you can see that 1, 2, 3 wave reversal right there. And then, what we're doing is seeing price action beyond that once that momentum trigger is confirmed. CCI. CCI is a different conversation, right? This is an uptrend. So NEE and CCI, very, very different. As far as earnings, I do not play Prabish. I do not play this close to earnings. What is the window for earnings? Now, when you say it's close to earnings, have earnings, here's what I'll tell you. If we're outside of 2 weeks, preferably 4 to 6 weeks, or even 4 to 2 weeks. But if we're outside of 2 weeks, we have the time, because that's what's so important, to take advantage of the double green structure and play pullbacks. And that's really what the emphasis is. It's 642 earnings. And I can describe my entire earnings approach in one sentence, maybe two. Look 6 to 2 weeks out before the earnings date. Find double green markets, buy the pullbacks. Voila. That is how you play earnings. Now, we can talk about more sophisticated strategies, but the truth of the matter is, as I say often, what you trade is more important than how you trade it. The strategy that you ultimately use for earnings, that's a secondary conversation. You can deploy a really smart strategy in the wrong market environment. Focus on what, and for me, there's a little element of when, because the countdown to earnings is going to impact, I think, in a double green market very positively on the flow. So thanks for the question. Good stuff. Good stuff. Next up is, what are my thoughts on CAT and PINs? Hey there, Robbie. What are my thoughts on CAT and PIN? Well, CAT's double green and CAT's pulling back, and I like that a lot. Think about where CAT is within the current market, not just uptrend. And not just CAT's weighting, but also the reflation trade. So you have a trend in the actual price action. You also have a trend macroeconomically. CAT is a really good looking stock. Now, the challenge here, I mean, we got the trend covered both price-wise and macroeconomically. The next question is going to be, is CAT, and this is really an issue that we're having right now, is CAT in sync with those broader averages and sectors? Because what happens is, and we talked about this in the premium video, I take that back. Those of you that get the premium video, if you're in the Simple Futures room, or if you're in the Sector Secrets Mastery, these are topics we've talked about, which is if your individual stock is out of sync with this index or sector. Because remember, November, we had an ETF masterclass, and the masterclass was built upon the foundation of index, sector, stock. Start with the index, then move to the sector, then move to the individual stock. And if a stock is pulling back, when I say out of sync, if the stock is pulling back and the broader average or the sector is not, if that index, if that sector also pulls back, and the stock has already pulled back, and there's not that much room between the wave zone, sometimes you'll find, I think GM's a really good example of this, you're going to have some challenges if the broader indices pull back. All right, so keep this in mind with CAT. It doesn't have to be a prerequisite, but it is very helpful. We'll talk more about that in the future. Pins, I want really very little to do with. There is just a very wonky narrative going on with pins. Pins has already had a 1, 2, 3 breakout. It's coming back down into the zone. Yes, it's sitting at a point of control. So if there is something to do with pins, price-wise, I don't really find this an interesting level, but volume-wise, it is. Problem is, we've got way too much proximity to earnings, way too much proximity to a volatility and volume event. And look, gang, when you play earnings, whatever it may be, what had earnings yesterday? Oh, Netflix, right? When you play close to earnings, it's a binary approach. And to me, it's just, you're right or you're wrong. And I don't like to put myself in a situation where I'm having to flip a coin, essentially. I'd rather play the lead up into earnings, or as we like to say here at Simpler, the rally into earnings. All right, so pins, big no. Cat is definitely on the watch list. All right, let's see. Next question. Hey there, Steve. Can I explain why I picked the particular moving averages I use? Testing, Steve, testing. I understand the higher ones for sentiment, lower ones for trend, but why those particular ones? I tested them years ago, and that's what gave me the sort of insight, signals, reliability that I was looking for. Just a lot of testing, my friend. That's really what it was. We take a look at pins, right? So living, same thing. Thanks, but no thanks on pins. Well, let me add one more thing to the answer I had before. If pins was not right on top of earnings, I'd probably say, yeah, you could build a position here with a put credit spread or long calls. The timing would be right for either, whether you want to focus on the credit collection or the debit. So had we not been so close to earnings, I'd probably say yes. But I'm really uninterested so close to earnings. So I hope that helps. Do I have any opinions on Netflix? Alex, I'll tell you what, I think the move into earnings was pretty decent, but let me tell you straight up, regardless of whatever Netflix does today and after the market can digest and open, that's going to be around 505, it looks like. What I can say is this: Netflix would not have been on the radar. So whatever Netflix does, I'll tell you that I couldn't have done anything with Netflix, because take a look at the very bottom here. I don't have a double green. It would not have. In fact, Netflix has not been in a double green trend, and it was briefly last September, right? So the criteria that I need to even justify, to even validate, to permit me to play a quote unquote rally run to earnings, I didn't have it. So it just wasn't on my radar. So I really can't say what is going to happen, because I just haven't been watching it, because it did not meet the criteria 6 weeks out. Does that make sense? So knowing what to watch is probably as important of knowing what not to watch. And I'm sure there are some great setups that are waiting there, but none of them were for, my set of indicators and my set of approaches. So this was a thanks but no thanks. It never met the criteria. If I can't check the box, I can't take the trade. All right, next up is Bank of America. Financials this morning are absolutely on my watch list. I like the way financials are looking. We've gotten past most of the major earnings. So while I may not play specifically BAC, or maybe I will, XLF is definitely on the watch list. So again, what I'm going to have the challenge of, especially when we start to pull back, we'll talk about this a lot more, but that is when the underlying stock is out of sync with the sector that it is heavily weighted within. If it's lower weighted, it's not as big a deal. But if it's a top 11, top 15 name, definitely top 5 or 6. But if it's weighted within a sector and the individual stock is pulling back, but the sector or index is not, if the index does roll over, you're going to have some problems with that individual stock. And I'm having right now, again, that synchronicity is not a prerequisite. It's not required, but you can see in certain environments, it's going to be pretty important. All right, let me adjust my chair here. There we go. It is going to be pretty important. So I think we're seeing some of that, frankly, right now. All right. So I like, by the way, Bank of America, generally speaking. I mean, this pullback here, I'd love to see another trigger similar to that, with the double green setting it up. And if it goes yellow during the pullback, if the preceding trend was double green, no problem. I get that question quite a bit. Rog, what if the market goes yellow? And I'll always ask, well, what preceded it? Well, double green, no problem. How long has it been yellow? 1 day, 2 days? Until it exceeds 3 to 5 days, I'm not really that concerned. So thanks for the question. And that leads to 5273 to confirm. So both double green trending sectors and stocks should be pulling back for a possible entry. That synchronicity does help. Yes, it's going to be a filter. So it will eliminate some setups, because you might see that an individual stock is pulling back, but the broader sector or index or is not. You'll find that you may not be able to play some particular stock setups if you're using that sync criteria. Let's just call it sync criteria, right? Synchronicity, like the great Police album, is not a requisite, but in environments like this, you're going to see what your stock is susceptible to, what it's vulnerable to. What are my thoughts on NQ next week with FANG earnings? Again, I don't predict. I just think that the path of least resistance is up, but not in every index. Not in every index. NQ is not a trend that is as established as the Dow. Even the S&P has a more established trend than the NQ. However, since the NQ has turned into more of an uptrend, I'd be a buyer of the dip. Once I go double green, I'm a buyer of the dip. So I don't know what's going to happen. Gang, think of it this way. How many of you are boxing fans out there? MMA, boxing, fight fans. You don't have to be a fight fan. The analogy works anyways. There are fighters out there, and generally speaking, if you look at the history, there are exceptions, of course, but if you look at the history of the sweet science, you will notice that in boxing, a lot of the greats are counterpunchers, right? And that means you're letting your opponent, for those of you that, are not boxing fans, that means you're letting your opponent commit to an offense and then you're countering it. I think trading is much the same way. I don't want to go on the offensive in trading. I want to counterpunch. What's a pullback? I'm counterpunching. What's a breakout? I'm letting the market do something and then I'm going to respond. So I'm always waiting for the market to do something. Throw that punch, right? So once the market's thrown that punch, what I want to do is then determine what, if anything, I have to do. I can just parry it, which means I'm really not going to do much, or I can try to seize on it, right? That's the approach. I'm not going to predict what the market's going to do. I'm going to let the market do what it is going to do, regardless of me. And then I will counterpunch. Then I will react to what it's done. So I hope that answers the question. And gang, look, I think it's really important to remember something. And this is everybody. Nobody knows what the markets are going to do. Nobody. So any question that sort of is one of those, well, what's it going to do? Probably it's more of what it has been doing. That's usually the answer. Probability lies in the higher percentage, and the higher percentage is what does it normally do? Are there exceptions? Of course. So if a market's heading higher, it's probably going to keep heading higher. If a market's heading lower, it's probably going to keep heading lower. If the markets are chopping, it's probably going to keep chopping. What you're waiting for is that initial move. So if a market's in a range and it suddenly breaks the range, now you start to counterpunch. If a market's in a wider range and it moves down to the bottom of the range, now you've got something to do. So you've got to find those spots where, look, is your market sort of the opponent? Yeah, kind of. So when your opponent shows you something, then you react. So I hope that makes sense. Nobody knows where the markets are going to go. The best traders just embrace the probabilities and accept that they're not always going to work. They just know that if they look back over the course of the month, the week, the career, the probabilities will serve them. Traders who are always looking for leading, what's the market going to do, predictions, watch TV. That's what those guys do. All right. So I hope that makes sense. What is a double green? A double green is when the structure of the 8, 13, 21, and 34 EMAs are in sync or kind of organized, structured in such a way that the probability is that we're going to either see continued upside, chop, or weakness. So I look at the relationship between those 4 exponential moving averages. The first row of my JT multi-trend, what I refer to when I talk about double green, the first row is that relationship between the 8, 13, and 21. The second is the 34. And that's what I use. Okay. So anyways, gang, I got to wrap up here. I'm going to dive into my Sector Secrets Mastery. You guys can join us for a special live stream. I won't be doing this often, but I figured the markets have been a little wonky. We definitely here at Simpler like to help out the community. So whether you're a member or not, we care. I mean, that's just the bottom line. So I thought it'd be great to at least give you guys some of what we're talking about internally. And hopefully that will help you out. All right. So I'll see you guys there. Have a great one. I'll see you tomorrow for Charts and Coffee, same time, same station. Be good to each other, gang.